Hi, this is Jason Sen from daytradeideas.com. Today's video we're going to look at the Aussie dollar. Did a webinar yesterday for some of our clients, and this one is probably the most exciting trade I can see at the moment. I've put these blue triangles on to try and highlight the fact that I think this is an inverse head and shoulders. We actually did hit some very good support. If I can just get the weekly chart up. Actually, this is the monthly chart. So this monthly chart goes back to 2001. You can see we had a huge rally up to 2007. 2007, 2008, obviously we collapsed with many other markets, and then we continued higher. So this rally went all the way up until up to 2011, and it's been since 2011, mid-2011, that we've sold off to the beginning of this year, 2014. And you may remember that we called a low in the Aussie dollar around the 3rd of January when we saw the test of this big fib support line here, the 38.2% fib, going back over that whole 10-year period at 86.72. The market bottomed actually at 86.60, so quite incredibly within 13 pips of that big fib support. That gave us the confidence to call a low in the Aussie dollar, and indeed, fortunately, that has played out. And as I flick back to the daily chart, this is just giving us some extra confidence in what we think will be a bull run in the Aussie dollar. We bottomed out, as I say, at 86.60 in the let me see, that was end of Jan. At big weekly or monthly fib support, and it does look like we're forming an inverse head and shoulders here. You can see the blue triangles are just trying to highlight the fact that this is the left shoulder here, right shoulder here, the head in the middle. So we are in fact holding 55-day moving average support and some good fib support on the daily chart as well, around the 89.15, 89.00 area. In fact, the 55-day moving average is at 89.07, and we certainly haven't managed to close below there at all, even though we gave it a good little test on the 3rd of March. So all in all, I think we can start to build the final part of this right shoulder. A push through this little trend line here at around the 89.85 area would be a further positive signal, and then we can push on to the neckline and fib resistance at the 90.75.80 area. Just note there, we've also got the 100-day moving average at 90.90, so this is going to be a real struggle around this sort of 90.75, 90.90 area. I wouldn't expect us to bust straight through this immediately. We maybe hover around there, below there for a few days, push above and below, but if we can eventually break above there over the next couple of weeks perhaps, we can then push on to the 200-day moving average at 91.73. We've got some longer term fib resistance at 92.30, and then 92.10, 92.30, call it, and then we should head on for at least for a good measured target of 93.40, and probably even higher than that. So that's a sort of longer term view over the next days, weeks, and possibly even couple of months for Aussie dollar. Does look very positive indeed. The only thing that would change out really is a move below, and in particular a close below 88.65. I'd have to question whether this call would actually be working. We could drift as low as 88.60 and still form this shoulder. You can see that the left shoulder here, the low is actually as far as 88.21, but I don't think we'll get that far. I think this right shoulder will bottom out above the left shoulder, which would be an added positive signal as well. Okay, that's it for Aussie dollar. Thanks. I'm Jason Sen from daytradeideas.com.